Alright, so good morning dear traders, Winston here, aka Mr. Mayor Forex Trading. Let's jump into this trades today. Let's see what the markets are holding for us. Today is of course the 16th, let me just get it, 16th of October 2024. The time now is 20 to 11 South African time, as I am in South Africa. Alright, so the last 2 months I've been doing a lot of explanation. I've been doing a lot of real-time trades and real-time trading strategies and ideas and so forth for you guys. So I hope you guys are enjoying these videos so far and enjoying the way I do my trading styles and so forth. I give real life with no future reference, no nothing, on the market, real life examples of trading styles and trading methods, and I hope you guys learn from it. So I do my things a bit differently. Excuse me. I do my things a lot differently. Yes, I can put out videos. I can backtrack, and before I can move the markets back to before this move even happens, and tell you guys, oh yes, at this level of support, we are going to put a trade in there, and of course you need to look for this level of support, and then I can do that. But I put these trades in live. You can go back on 2 or 3 videos before all of this or even there. I do real live, real-time trading and training, basically, on how to trade and how trades work out. So I don't know the future. I just trade the way I do. I give examples, and if it works, it works. If it doesn't, it doesn't. That is trading. That's real life trading. That's why I like doing this live thing, and that's why I'm also on a demo account. Before people start saying, oh, Winston, you're on a demo account. Yes, I know, because on this account, I give examples, live examples on YouTube, live, on the live market as it is. That's why I use a demo account, because I'm explaining and using examples on how to trade and certain trading styles and what to look for and what to do. Okay, so just so you guys know, that is why I am on a demo account. The things I do here, when I do put a trade in here and I do it on my real account, I tell you guys this trade is on my real account. Like this trade over here that I'm still in on the demo account is also a trade that I'm still in on my real account. I told you guys this when the markets were still down here. I told you guys this trade is on my real account as well. So from here, it could have moved lower. It could have taken me out, but luckily it went to the upside. So yeah, before I get people asking and telling me, oh, Winston, you're not a real trader, or whatever the case may be, I use live. I trade live. And I don't have to show you any of my Forex books or anything like that, because all those things can be faked. An account can be faked. Anything can be faked. There's so many traders out there online that show people, oh, look at this big account of mine. Look at this, and look at this trade I took last week. Look at this trade I did. It is frustrating because you can backtrack. I can backtrack before this move is here. I can backtrack, make a video when price was still there, and put a trade in and say, oh, look at this nice trade that I took, and it was so nice, and if you buy my course, yeah, you can also trade like this. And bullshit. I don't sell a course. I'm not here to sell you anything. I just trade live, and I train live on the market, on live market. It's different. It's not what, I haven't seen anyone do this type of training, this type of explaining. But I just frankly got tired of these trading gurus selling people bullshit. That's why I decided to start trading live and started my YouTube channel. And hopefully I can get people to help me grow this channel so we can have real traders and build real traders and a real trading community. None of this fake stuff. There's so many fake stuff out there. You know, it is embarrassing. That's why I started my trading channel, and I display on this account, I display different methods of trading. I have got a style, I have got a way I trade, which I trade on my live account, but there are many other styles, and that's why I'm on this demo account, so I can explain all the other different styles that there is, because my way of trading might not be the way you want to trade. So I am going through all the trading strategies and styles that I know, and do real live trading on those styles and those methods, and hopefully you can find value in it and start trading the same way, and hopefully it helps you. That's all I want in this channel, is just to help people, because there's so many of these trading gurus that potential new traders, and believe you me, there are thousands of new potential traders every day going on YouTube looking for methods, or looking for something that will help them trade and help them trade the right way. Give me 2 seconds. I do apologize for that. My phone was ringing as well, and well, for those of you who don't know, I'm actually a musician, so yeah, I do music for a living. That's what I do, and my trading is my my pension fund, my pension that I'm busy building. That's what my trading account I'm building up to be my pension fund when I decide that I'm not going to be singing anymore and I'm too old for it. But for now, it's still a good journey, and it's still a good life that I have. Okay, so let's quickly talk about, I spoke about this now. Yeah, so, sorry, many thousands of new traders come online every day looking for a way to make extra money, looking for a way to supplement the income. That's why they look at trading videos. That's why they go into it. And they get caught up by these so-called fake gurus. These gurus that show you amazing trades. Like I tell you, you can backtrack and say, oh, this trade I took last week, I can, as I know, okay, this is, yeah, I know what the market's going to do. So I backtrack that before all of this is there. I make a quick video on this and then show people, oh, look, you see, if you buy my course, this is the way you can earn money. And it's all a bunch of bull. You can go on to, if you want to learn how to trade or get the knowledge. Look, trading you will not be able to learn in books or on courses or so forth. Trading is something you get better at the more you do it, the longer you do it. Trading, you have to, the more you do it and the longer you do it, the better you get at it. You will not be able to go to a book and learn and then start trading and you're a professional trader and you can somehow make it. No. There's a lot of emotion involved. There's a lot of other things involved with trading when it comes to trading. But if you're looking for the basics, go to ChatGPT, ask ChatGPT to give you an in-depth course on trading styles and how trading works. And ChatGPT will give you a big module, and you can go through that and you can go study that and go learn that. So you've got the basic knowledge of what trading is and how trading works. Then you can come back to these videos and watch me trade live and see how I do things to get more knowledge. And then you have to open a demo account and you have to start trading live yourself. So you can find what's comfortable for you. You can find your own style, your own method, your own way of trading, and that is how you trade. That's how you learn to trade. That's how you start. Buying these so-called fake gurus courses, you know, a lot of the new traders come online, they see these fake gurus, they buy that course, they study that course, and they try and implement it in their way of trading, and it doesn't work. It usually ends up in misery and disappointment, and they leave the trading scene and they say, oh, trading is a scam, and it's not trading. Forex trading or whatever trading is not a scam. Those people are scams. They are scamming you. If you want to know what traders to follow, there are a couple. If you see a trader that trades live on YouTube, on the live market, on the live stock market or whatever, but he trades live, that is a person you can follow. These people that put up these little winning videos, stay away. If a person can't trade live, then unfortunately, he's not a trader. Alright, so let's get to this gold quickly. Just want to have a look at the gold. And this gold, the style that I used here to trade the gold was basically the style that institutional traders use, the big boys, you know, banks, institutional hedge fund managers use to trade. So they look for zones. Let me just get my block here. Insert objects, shapes. Here we go. I had a busy day now. So they look for zones like this. This is basically what they look for when they try and put trades in or look for trades. They look for places where you get sideways movement like this. This is a ranging market over here. So they look for these areas. And as you can see in the previous videos, go back 2 or 3 videos where I put 2 trades in here. I had 2 trades in here, one over there somewhere and then one over here somewhere. But I put trades in. Actually, let me take the lines away because I can just go to my history there and I can do that quickly. Put the trading history on. So it was this, a buy order there and a buy order there that I had in on this, and you can see a couple of winning trades there as well. So you can see I had a buy order there and a buy order there before any of this was here. So I put these 2 buy orders in here with no stop losses. Because remember, these big boys, they don't use stop losses. They don't trade with stop losses. They put their trades in strategic places where if the trade doesn't go in the direction they thought it would go, usually it comes back and they can close their trades for either a small loss or a small profit. Like these 2 examples that I have here. As you can see, I got knocked out there and there. So I had these trades open, 2 trades. Price went up, nice. I was a bit of nice profit, and then price broke down to the downside. So eventually I was about $600 at a loss. And then once price came to this level of support, I put another buy order in. So remember, I'm already $600 in the red, already $600 in a loss by this stage where I put that trade in. And as price goes down, I put another trade in right over there. So this one here also I put in on my real account, as it was nice, deep retracement into this support zone. But on my real account, because I don't trade like the institutional traders do, I had a stop loss below that. I trade with a stop loss on my real account. I don't do this kind of trading without a stop loss. But I'm showing you these ways and giving you real life examples of this. Now, this form of trading can be very profitable. So I put the trade in there. Already I have $600 in the loss. I put another trade in, and yeah, it was the $600 plus. I'm still in the red because of that trade there. So I put another buy order in there. So I had 4 buy orders in this trade, and I was in the negative. So eventually price started moving into my favor. So that one went into profit, that one went into profit, and these 2 trades over here, I closed them down there and there for small profit. Now the reason I put these trades in, and institutional traders put trades in sideways moving market, in ranging markets, is because historically, majority of the times when price breaks out of a sideways moving or ranging market, this sideways moving market, it tends to go back into that zone and either move in the original direction or break back up to the upside. So majority of the times price do come back there. So traders put their trades in there, and with the knowledge and knowing if they are wrong, like I was wrong there, majority of the time price does come back into that ranging market, into that ranging area, and then either break down to the downside or to the upside. So which means if you put your trade in there, you cover it from a point of, if you go into a negative, majority of the times price will come back and you can close your trades for either a small loss or a small gain. Like I did there, a small gain, and I closed those trades. These trades I had still open. So this one, I was doing a trailing stop on this buy over here. Doing a trailing stop, so once I saw break, that high got broken, I knew that was my new swing low. And there I saw a low form. Once that high got broken over there, I moved my stop loss back up to there. And I saw price come down, price broke, that high got broken, so this is my recent swing low. So I moved my stop loss from there to there. And as you can see, price came down and took my stop loss for a nice profit over there, and then still went to the same direction. This one over here, the trade that I'm in on my real account as well, and the trade that I'm in here as well, is still open. I haven't done a moving stop loss. I haven't moved my stop loss. I've moved my stop loss from not being in profit to being a little bit in profit. So I've moved, I think, a little bit, to this level over here. Just a little. So I'm still far away from there, because I'm aiming for that take profit over there. I'm aiming for 2,681. Now my main goal, where I think gold is going to go, is gold is probably going to aim for the 2,700 range. So what I want to do is also, if I see gold break through this trend line, I will explain. If you want me to explain the trend line method that I use here, on the first and the second trend line, I'll explain it to you guys. It's a bit technical. Look, it's easy once you understand it. It's easy, but to start understanding it and know what to look for is difficult first. You've got your main trend line that you form on the 4 hours or the 5 hour trend on the 5 hour time frame or the 6 hour time frame. You make a main trend line to know that you are still above that trend line, so you are looking for buying opportunities, because this is the long-term trend line, and as long as you are trading above that trend line, you are looking for buys. But also when you go down to the lower time frames, like I'm on the 1 hour time frame now, I will look for places where prices start turning around. So that's my lows I will form. Once I see a second low come, like this low over here, I will basically put my trend line from the first low to the second low over there, and then base my trend line on those ones. Then you get your second, before your big move, before you see a big spike, you will always see a little bit of a low before a spike to the upside. Now that low, you have to, from that area, you have to start seeing where you can see basically, let me show you here quickly. Let me take that away quickly so I can, no, I'm not going to delete, I'm just going to take it away for now. So what I want to do is I want to see where I can see prices basically look like they're respecting a line. Like there I can see those and that. I can see that there's basically a line there. So what I will do, I will take a line and start getting these ones over here, this level over here, and that one in a line to see if I can start forming a line there. It's usually the in-between line. So I will do that. Alright, so now I can see that there is a bit of a trend line, and it's been respected there as well. It's been respected there and there. So now I'll take this line down and see, oh, it connects up to there. You can see where this trend line is respected. So this is my in-between trend line. So when you want to work on take profits, that will be your TP1. That will be your take. So if price breaks above here, you can or usually when it breaks the top trend line from your previous move, this move over there, usually when it breaks that and comes back for a retest, you put a buy order in, and this line over here, once you can see you form a line, you can start making your TP. Once it breaks that, that's your take profit. If it breaks that, or it pushes down. But I'll explain that in detail. I can explain this method of trading also if you guys want to know that. But I'm working on how the institutional traders trade first. Alright, so they just put trades in and in a direction which I think the market's going to move. And I thought gold is going to move to the upside because of two main reasons. When you trade gold or oil, or need to know what direction to take on them, you need to have an understanding of what's happening in the world. Gold will go up as soon as there's political instability within the US. Now, I know voting is around the corner of the US, and I know it's a tight deadlock between the Republicans and the Democrats, and there's a lot of political unrest and political instability within America, within the states. So, which means whenever there's unrest or political instability, it means the currency, the dollar, is also going to be in an instability or an unstable position. So what do people do when they don't know if the value of the currency is going to go up or lower? They tend to buy something that holds its value, like gold. Gold holds its value. So as soon as a currency is in trouble, people take their money and they buy gold, because that's a safekeeping. It means your value of your money will increase or will stay the same, all depending on how long you keep it in the trade over there. So that's why I have a feeling that gold will still go up much higher than it is now at this stage because of the instability. And if Donald Trump wins, I think the dollar will grow stronger and people will move away from gold and move back to the dollar, which means then gold will drop down to the downside. Now, I know there's been 2 attempts on Donald Trump's life, and if they succeed, I'm not advocating for it, but if they succeed by assassinating Donald Trump, you would want to be on the buying side of gold, because the dollar is going to go through an absolute annihilation. It's going to cause big chaos within the US. So you want to be on the buying side of gold. So majority of the things tell me to buy gold, and I will keep gold and keep holding on to this gold trade until the voting of the US is done. And if Donald Trump gets elected, I know people are going to put their money back into dollars, and they're going to take their money out of the gold, they're going to sell their gold, and they're going to have it back into the dollars. So then I will start looking for some selling opportunities. Now, that's now for the gold. When it comes to oil, I also like to buy oil, especially when I can see there's wars in the world. The day that Israel bombed Iran, I made a video on it. If you go back on my videos, and I said I must jump into the oil now because oil is going to spike to the upside. And I jumped into the oil and it has spiked to the upside, and it's still going to go higher because the war is not done. It is just starting in the Middle East. The instability is just starting. And why do you think oil goes up when there's war? Quite simple. War costs money. You know, you need to get your tanks there, you need to get your men there, you need to get the bombs there, you need to get planes and buses, and all those things use fuel. Planes use fuel, tanks use fuel. And what is fuel made up of? Oil. So which means these countries that are going into war are going to buy oil in bulk to supply their tanks and their ships and their planes and everything with diesel or fuel. And what happens to something when it's in demand? The price goes up. People buy oil. That's why oil will go up. It's logic. If you subscribe to this channel and you start watching these videos, you will see trading is logic. It's logic. It's just pure logic. And if you are a person that wants to invest long term, you're looking for something long term, then oil and gold will be your answer to that. And especially if you are in tune with what's happening in the world, oil and gold is your go-to. And on this channel, I explain these things to you guys. If you want to find out more in detail, please message me down below, put it in the comment section, and I will gladly explain these things to you in detail. I'll go live and only explain this in detail. I won't jump around like I'm jumping around now. Okay, so let's quickly go to the euro yen. So I am in a buying position on the euro yen, as I am on the selling side of the euro. Okay, so the euro is selling off or growing weaker. Not the euro, the yen. Sorry, excuse me, not the euro. The yen is growing weaker. That's why I want to sell the yen. So anything against the yen, I want to buy. So I want to buy the euro versus the yen, because the euro is going stronger. Okay, the war in the Middle East might disrupt this a little bit, but we'll see how it goes. Same with the US. I want to buy the USD against the yen, because the yen is growing weaker. Now, the euro USD, this is where a war comes in, or where a problem comes in. With the US being in a political turmoil at the moment, and with the war in the Middle East and the United Nations, and there's a lot of things that go with it, it is weakening the euro a little bit against the dollar. So, and exactly with the pound as well, the pound and the USD, you must know these two run basically on the same trend. So whenever the euro goes down, the pound will follow suit against the US. Okay, so I was looking for a selling opportunity. I missed my opportunity there. Exactly the same. I missed my opportunity on that one over there. I missed it over there. So there's two opportunities I had that I missed to put a sell order in. So my next move will be to wait for, and price has broken through here, and I see there is a retest over there. Price has retested it, so I might just jump in for a selling opportunity, but I think I've missed my chance, because I had a chance there and I had a chance over there, and I missed both of these opportunities. So at this point of time, I do see that it's broken through this little trend line over there as well. There's a little bit of a retest, so I might jump in for a selling opportunity on the pound USD. So what I'll do is, I think some live now. I'm going to put a sell order in, because that to me is a selling, is a sign to sell, and we might see it come right back down to this level over here. So let's see. I just want to quickly I just want to see where my thing is. I just want to quickly see if my volume is at the right level. So stop loss, let's move it up a little bit. I just want to see how far it is. You can work it out with a calculator and see how it goes, because I want to no, that's way too much, way too much. All right, so let's delete that one and let's go down on this to 0.10. Let's do that quickly. You can, there is calculators you can get that works it out for you, but I find this way just to be much quicker, so I can more or less judge what I want my volume to be at. This is how I do it, instead of sitting there trying to work it out with a calculator. So basically what I need a wide stop. Nope, that's still a bit too much, so I'm going to delete it. So I'm going to go a bit more down to 5, let's say 4. I think 4 would be the ideal. So I'm going to put a sell order in there, and then I'm going to use my sell in there. No, it's not. Sell. Yes, it is in now. There we go. Then I can put my stop loss just above there. Let's see what it is. Yeah, I want it to be about 50, you know. I want to be wider than 50. Okay, so that's that. Good, so I got a sell order in there. And let's make a stop loss, or a take profit, basically over there. Let's see, that's also about $50. So it's a 1-to-1 risk to reward ratio. I'll keep it there. Okay, so let's see if this one pushes downwards or upwards, but we'll see how it goes. I do have a slight suspicion it's going to still continue on down, and I think it's probably going to continue on down past this long-term trend line, and that's actually what I'm hoping for. Actually, I'm just going to move it all the way down, because I do think this is the long-term trend line over here. And if you want me to explain these trend lines or how I do these trend lines, just put in the comment section down below, and I'll do an in-depth explanation on how you can do these trend lines. And because there's a couple of different methods that I use when I trade, but yeah, so I'm hoping for it to break the long-term trend line and then probably do a retest. If it does break this long-term trend line and comes down, then I know, okay, I can just do a nice trailing stop, and then we in it for the long haul. But we'll see how it goes first. There's a couple of areas it still needs to go through, so let's see how that goes and work with that and see. Okay, that one there, I just want to make sure that I've got all these in the right place. Yes. Okay. Alright, but that's that for me for today. Please guys, please like, share, subscribe. If you want to find out more, like I said, just put it in the comment section below, and I will do my best to explain it to the best of my abilities. I'm just here to trade live and show you guys how you can all trade live as well. Oh, I need to lift this one up a little bit because I got a bit more in there. Huh? Oh. Okay, so it needs to go a little bit more. Okay, so we can see all of them plus the main one over there. Yeah, so if I exit out now, like in the beginning of the month, beginning of this month, I brought this account back down to about 10,000. I got about to $10,076. So I had a couple of mess around trades just to get the account back down again, because I don't necessarily want to start a new demo account, because then I lose all my previous data and so forth. So I needed 10,000, and then we work from the 10,000 again and see how much we can make this month by trading different styles and different things. And so far I have made $430 on this account, on the 10,000, and we're in the middle of the month. So it's in 2 weeks time. I've already added $430 to the account. If I exit all these trades I have now, the account will be at 11,800. So which means in a half a month, in 2 weeks, I basically bought the account up to $2,000. So that's a 20% gain on the account. And it's good. You can trade that way, but it's very risky to trade that way. So yeah, I know it's a lot of information, and it's a lot of things that you might not know, and I'm working through this quite quickly, but I need you guys to tell me, Winston, wait a little bit, stop, and ask me where you're battling, and I can focus on that. Now I'm just running through, I'm just touching base on a couple of things, so I can maybe give you a broader explanation or a broader idea of how it works. But if you want to know specifics, ask me in the comment section below, and I will give you guys specifics on what I do and how I do my things. All right, but from my side, have a good trading day. I'll check in tomorrow morning again. Well, no, I don't think I'll check in tomorrow morning, because I'm actually off to go and do some shows this weekend. But if I can and when I can, I will definitely jump on and I will do my live, and we can chat about things. From my side, have a good trading day, and please like, share, subscribe, and I will see you guys again in the next video. Cheers.